Hi traders, and in this video I'm going to show you how to use Fibonacci trading for finding entries, exits and potential reversal zones when trading the forex markets. So getting straight into the charts now, this is a live chart of the pound against the dollar. This is a 15-minute chart we're looking at here, and I'm going to show you quickly how you can actually use Fibonacci trading for finding possible entries, possible exit regions and potential reversal zones. So before we actually get into anything here, what I want to point out is, let's take for example, we come to the market and we've seen this steep drop in price today, and we're looking right now for a potential short. We've seen that the market has dropped off here, and we're thinking about potential regions now that we can actually put on a short position. Now, I'm not going to tell you to just take a short position here and be very risky and gamble, but we can use a tool called Fibonacci to find potential regions in conjunction with other things in your trading toolkit to actually help you pick out the best possible entries. So let me just show you how it works. You'll use this Fibonacci tool and you'll put it right at the bottom of a move, and you'll analyze the bottom to the top of that particular move. Now, for reference sake, in this video I've only highlighted pretty much 2 Fibonacci numbers for entries. These are particularly the 2 most common numbers that traders look for when it comes to Fibonacci trading. There are a few others, but generally the 61.8 and the 78.6 are the 2 most common Fibonacci trading regions. And as you can see already, price is doing something particular at these particular regions. 50% isn't a Fibonacci number, but over time 50% has become very synonymous with Fibonacci, even though it's not an original Fibonacci number. This is just 100%. This is a zero. As I mentioned previously, you take from the top or to the bottom. These 2 numbers down here I'm not going to mention right now, but you'll find out why these are here later on. So we've set up the charts. We weren't able to get a position on this short for whatever reason. Maybe we wasn't at the desk, maybe we just missed the move, but we want to get a piece of the action, so we're looking for how we can actually get on a short position. So after the price has dropped to this region, we put on the fibs, and we're saying to ourselves, okay, where are potential good regions? So as I've mentioned already, 61.8 and 78.6 are popular Fibonacci numbers, so it's by no mistake that you can see that price pushed up to this region. And this isn't always going to work, but I challenge you to go on any chart now, and put on a Fibonacci grid. As you can see, this is M24. It's just there pretty much. Most brokers will offer you this opportunity to use this free tool, and this is the 61.8 region, and you can see loads of price action in this particular region. That's not by mistake, because loads of traders around are using Fibonacci. Secondly, we see that it did try to drop off, but it wasn't helped with enough steam, and it pushed back up now to the 78.6. Now if you took a trade in this position, because I know some of you watching this video may be thinking to yourselves, oh, you might have took a short in this position and it went down and went back against you. Well, if you took a short in this position, I wouldn't have expected you to have a stop loss that's not above here at some regions. So even though price did come back to this higher fib number, you wouldn't have been tapped out. So some of the great things about using Fibonacci are, look at the price action here. All of the candles are very small. This is a 15-minute time frame, bear in mind, and look at the potential risk. We're talking about 5 to 10 pips risk here maximum, and we're going to talk about the potential reward you're going to be able to make later on. But let's say, for example, you took it from the 61.8, price barely went above this region, you would have had a safe trade more likely than not. If you took it from the 78.6, prime example, this is a prime entry, okay, and with the right analysis of candles, okay, which is another part of a toolkit when it comes to trading the forex markets, and in conjunction with Fibonacci, you would have been able to pick out this region, okay, if you didn't get the first region, as an optimum opportunity to trade the forex markets in and get this trade on. And we're talking about minimal risk here, because this is the prime entry, as you can see. So that's one way you can pick out the entries. It's pretty much self-explanatory. Once you've got the numbers on, you just wait for these particular numbers and you see what price does at these levels. As you saw, if you was looking at 61.8 or 78.6, you could have actually taken a short in either region, and as long as your stop wasn't too tight, okay, you would have been able to make a very good entry in regards to this particular trade. Now, that's the entry we've already established. We're looking at 5 to 10 pip stop losses here. You can check the numbers on the side for even more clarity. But what are particular exit regions? Okay, because that's the second phase of today's video. Now, what you strongly start to see now is, once you start using Fibonacci, is price action and Fibonacci normally tend to line up. So what you're going to see here is, and Fibonacci works so well, so often, so many people don't believe it actually works. It's as simple as putting this fib grid on and looking at the numbers. So where, if I particularly took a trade in this region and I've got about 5-10 pips, okay, risk, where am I looking to take my profits? So it actually really comes down to how you trade. Okay, you might have a set amount you take per trade. Let's say you aim to risk 7 pips, okay, which this trade could have potentially given you, and you want to make 15 pips. Well, you would have been able to make 15 pips on this move. Now, if you're going to strictly trade Fibonacci and you're going to be looking at levels in regards to Fibonacci, maybe you say, I'm going to take this trade here with my maximum of about 10 pips stop loss, and this could be potential level 1. That's just 100%. So that's taking the trade back to where the market stopped previously. So you can see the market dropped off first, pushed back to 50%, okay, and dropped very vigorously through this previous bottom. So that could have been potential exit area number 1. So you could have taken a trade here and decided, I'm going to have my take profit in this region. So what we're actually looking at in this region is, we're talking about the 170, 160 or so region for a short position. We're looking at the 170, 130 for a take profit. So we're talking about pretty much about 30 pips. Let's round down and go 25 pips for even easier and even more realistic target. So we're talking about 7 to 10 pip stop loss for 25 pips take profit. Okay, so you do the odds, that's quite good odds. That's about 4 to 1, okay, give or take a few pips. So that's 7 pips stop loss for 28 pips or 25 pips, between 25 and 30 pips take profit. That's potential region 1. That's a very good trade. 4 to 1 is what loads of people would take. I wouldn't complain with a 4 to 1 strategy, and you're starting to see now how these are potential regions. Going back to these lower numbers now, I'm going to use them as potential exit areas, but I'm also going to start to bring in phase 3 of the video, which is potential reversal zones, because what you can see here is market dropped through the 100% region and it's got dropped to another region that's famous for Fibonacci, which is the 127.2 region. You can see, look, price has stopped here. Why? Okay, this isn't my chance, and this is happening live. You can see the ticker moving. It's moving right now. So this could be potential exit area 2. Maybe you want to hold on for longer and you want the trade to go to here. Okay, I'm not going to mention multiple take profit regions because I don't normally really trade that strategy, so I'm not going to teach it, although that is a strategy many might promote to you in regards to Fibonacci trading. Okay, maybe this is the target you want to wait for. So now we're talking about the same 120, 171, 60 region for a short position, but now we extended the profit region to 171.20. So now that's an extra 20 pips, and as you can see, that's only maybe 1 or 2 hours extra waiting in a trade to get an extra 10 pips. Maybe that's not enough for you and you want the full scoop of the move. Let's go down to another famous Fibonacci number, that's 161.8. so now we're taking the same short position here, bear in mind, which is 171.60 region. Okay, same 10 pip or so risk. You can either go for 30 pips, 40 pips, or now we're looking at the round number, so to speak. So we're looking at 171. We're looking at a full 60 pip move, and as you can see, prices just try to get down here on this 15-minute bar. And what we're looking at, we're looking at a few hours. Okay, you could have taken this trade in the night time, gone to sleep, and you could have woken up to about 60 pips profit. So these are potential exit areas, but also bear in mind these two regions, 127.2 and 161.8, are levels where price starts to get a bit stretched in regards to Fibonacci. So you might want to start thinking about, if you are going to try and get a reverse position on, looking at these potential levels for potential reversal zones. I'm going to tell you to, if you're going to take a short in this position, to bag your profits at either one of these three regions and just enjoy your profits. You don't need to start trading the other way. And just for even more clarity and more emphasis on how good Fibonacci numbers are, look at this last region here. You can see 161.8 lines up very well with this particular region from a couple of days ago in regards to trading. So this isn't by mistake that these levels are being picked up. So that's something you need to bear in mind. So that's pretty much it. I want to thank you for watching today's video on Fibonacci trading and how you can use Fibonacci for entries, exits, and potential reversal zones. If you want more information, go over to VintagEducation.com for more trading strategies, techniques, and tips. Thanks and take care for watching today's video, and don't forget to subscribe to the YouTube channel if you want more videos like this.